Hi everyone, JR with Secure Metals, bringing you another technical update here for both gold and silver. Quick update here, Fed minutes just came out, nothing changed. Of course, they're going to continue to print. So I just wanted to show some pivot points here on the gold and silver market, as well as the Dow Jones and the dollar. So this is your daily chart here. Again, still a lot of momentum, but we are having some sideways consolidation here. So we can see that we are trading sideways as of now. And this is your trading range, roughly from 1358 up to about 1377. Currently, possibly building a bit of a flag here. That might be positive. We might see a breakout to the upside or to the downside. Of course, we would look to find some support here around the 1350 area. Let me delete some of these lines here. So on the daily chart, all right, so this is your trend line right now. The stochastics are starting to move lower, but again, I think with this announcement, we should go higher from here, possibly come down a bit here, but again, this is on a very nice upward trend. I don't expect this trend to break anytime soon, especially after the Fed announced that they are not going to stop printing, or the odds of them tapering in September are fairly low. So again, I would think that from here, technically speaking here, stochastics are still on the strong side. They have turned down, so we might see a move to test back this support line. If not here, then around 1352. If we're looking at the weekly chart, again, strong bullish candle here. I'm hoping that this 20-day moving average will hold. Stochastics are still moving up, so again, I think we have a shot of taking out roughly 1410 and possibly test the 1450 range, which is this 38% Fibonacci retracement extending from the October of 2008 low. Okay, as far as silver goes, again, both of these are in very nice short-term bullish trends. Again, really nice bullish candle here on the weekly. Stochastics are still going up. So again, I do expect let's see here. So again, I do expect this next fib level here, roughly at around the 61% Fibonacci retracement. I do expect this 24 level to be tested here within the next couple of weeks, and possibly even higher to the 26 level, which is the previous lows now, which would be roughly around here, roughly around 26 and a half. That would be the next target, depending on how we break through this this 2440 barrier. Depending on that, that's how, if we have a good strong break, then I think it'll continue. It'll easily touch 26 and a half. If it hovers here, we might see a little bit of a dip back down to 22, continue to go higher. If we're looking at the shorter term time frame here, again, I wouldn't expect to move below this 38% Fibonacci retracement, roughly around 2290. Unfortunately, again, like I've said before, I don't like this little gap here. I can't stand gaps because they just bother my brain when we don't close these gaps. I was hoping that we were going to come up to here, 2140, maybe 22, come back down, fill the gap, and then continue to go higher. That's not what we saw. So again, currently trading sideways between 2280 and let's say 2330. We have a strong resistant line here, roughly at around 20 and a half, 2320, 2330. I think a move above this level would easily take us to 2440 to test that 61% fib level. The daily chart still looks fairly strong here. A good move to the upside. Again, I'm still worried about this little gap, but at this point, we just have to wait and see. And of course, all of our moving averages are below us. Good thing here on the weekly chart here, and I guess you can say the same thing here for gold. It's really the first time since December of 2012 that we've been above this 20-day moving average. That's a very positive sign. What we'd like to see is this weekly chart, this 20-day moving average, begin to curve to the upside. So again, we'd have to see a strong move over 24 and a half for us to see this 26 and a half level. But again, very positive that we're finally above this line here. What we'd like to do is we'd like to see a curve similar to the one that we saw here on the daily chart, where we came, tested the 20-day moving average, it turned sideways, and now it's going back up. So that's again a good sign, and of course the timing is really nice as well. Let's look at the Dow real quick before I get into the dollar. The Dow Jones right now doing very nicely. Let's see here, from the rally, tested the 20-day moving average. I'm sorry, the 23% fib level here on the weekly, that's the daily chart. And what I do like about this also is you can also do a fib level here on this short-term rally from here to here. I would expect to find support. Again, this is your 61% Fibonacci retracement. So we have retraced under the 61%. Great time to get in the Dow, I think. Again, a really nice bullish divergence. And at this point, I think is a good time. They're not going to stop printing anytime soon, so we might do a little bit of sideways trading, but ultimately I do expect to hit these higher highs. And of course, this is your weekly chart here. Weekly chart does not look as favorable, but again, we are testing this 20-day moving average, and again, we are creating higher highs. I mean, in every possible scenario that you can think of, we are creating new highs in every single chart that you can see here on this. On the daily, on the weekly, and so on. So again, with this bullish divergence here on the weekly, us testing this 20-day moving average, the 20-day moving average still pointing to roughly around, let's say, 1 o'clock or 2 o'clock. If you're looking at a clock, that's still fairly bullish. I would expect this 20-day moving average to hold from here, especially with the announcement that they're not going to stop printing. 61% Fibonacci. So again, really a confluence of support roughly between the 1450 zone all the way up to the 14, let's say, or to the 15K levels. So I do expect this market to go higher, get above this trend line again, and then continue to go higher from there. If we look at the dollar, let's look at the dollar. Let's see how that broadening formation that I've been talking about for so long here. Add some lines, and this is your line right here, guys. This is your broadening formation. Again, I think I spotted this formation on one of my videos when the prices were roughly around here, and again, it does look like this trend is going to continue. Right now, you're probably going to find some resistance roughly around the 81.60 range, maybe the 82 range. So I do expect this to test this 80 level here. All right, guys, that's about it. Just wanted to give you a quick analysis here after the Fed minutes. Dow Jones looking really nice. That's a good sign. And of course, the metals are moving up. Really nice, roughly 1375, and I do expect this to go higher, like I said. All right, guys, happy trading, and thanks for joining me. Bye-bye.